How Florida's new reinsurance program will fare in the aftermath of Hurricane Ian is just one of many questions that will be left by the storm's lasting impacts. Here to discuss the Florida property market issues in light of the hurricane is Christopher Graham, Senior Industry Analyst, Research and Analytics at AM Best. And Chris, to what extent will Ian exacerbate the long-standing issues in Florida's property market?
Good morning, John. This is certainly not the first storm to hit Florida, and it's not going to be the last. Anyone writing in Florida comes with the expectation that you're going to have such a storm. So, it could bring some immediate issues with claims getting paid just on volume. The flip side is, storms like this could also bring, some significant rate increases and open up opportunities for new insurers to capitalize, or insurers who are already capitalized outside of Florida to maybe enter the state.
So some have estimated that the losses could be as high as $30 billion. What impact would that have on the market?
So let's go back a little bit through some history, right? And go back to Hurricane Andrew 30 years ago, which, in current dollars would be about a $30 billion event. When that hit, it was quite a shock to the insurance system overall. And realistically, many insurers realized that Andrew could have been even worse when you look at what is a relatively small storm, and it hit the lesser populated Homestead area instead of making a direct hit on Miami. So that opened a lot of eyes. And the insurance industry has done very well since then to capitalize itself, each company's done a good job watching its aggregate exposure, not just the primary insurers, but also the reinsurers. So it's been relatively stable since. And if you look, going forward after Andrew, we had Katrina, which was probably about 3 times the size of an insured event, and we're able to manage it. So I would think a $30 billion event, yes, it's a big loss, but it's certainly not something new, right? We've had, starting with Andrew, we've had other storms like Irma just a few years ago. Harvey was, so a $30 billion event is somewhat accustomed now.
Will the reforms that came out of the spring special session come into play here?
It's hard to see that they don't. When you're talking about a $30 billion event, a $2 billion reinsurance protection, that's certainly going to, come into play. I think you also have to look at it almost from the other side. Is this $2 billion reinsurance program going to be exhausted? And that's going to depend more on how much private reinsurance, the local carriers have been able to obtain.
So some people after Andrew did not have power for weeks. Does a $30 billion loss estimate capture the issues that remain in the aftermath with things like closed business?
You really have to look at, who's making the estimate and what they're including. Some estimators will include the business interruption and say exclude flood. Some might include the flood, but only look at the immediate property damage and not include things like additional living expenses or business continuity. So, in flood, one of the reasons it might not be included, look at Hurricane Irma, and it was only about 40% of those who were in flood zones had flood coverage. So, since then we've seen the NFIP go to a risk rating 2.0, which raised rates for about 85 to 90% of property owners in Florida. So with increased rates on flood insurance and also, regular inflation putting a pinch on personal budgets, that 40% might be even lower. So some of those estimates, might not include flood because we don't know how many people actually have flood coverage. So there's a lot of factors included in that $30 billion estimate.
Let's look at a worst case scenario, Chris. What if the state's hurricane fund is depleted, or if Citizens just exhausts its claims paying ability?
Well, those are really two separate issues. So if the $2 billion fund is exhausted, look, how different is that from any other reinsurance layer being exhausted for say a primary company? It happened. The layer gets exhausted, you go up to the next layer. Citizens doesn't take part in that program. They were deemed not financially stable enough to be part of it. So if they go under, what impact would it have on the whole market? Well, anytime you lose, 7% of your coverage, because that's about what their market share is within the state, yes, it's going to create some turmoil. It's going to put an overall capacity crunch, and you would see probably some more rate increases just on capacity alone of the remaining insurers. But it's not just Citizens that could be an issue here. There's several smaller insurers in Florida who might be writing at, say, a 5-to-1 or 6-to-1 premium to surplus ratio. For a storm this size, if they don't have adequate reinsurance, they might face trouble as well. So there's a lot of factors that will take some time to iron out.
Thanks, Chris.
Thank you, John.
That was Christopher Graham, Senior Industry Analyst, Research and Analytics at AM Best. And I'm John Weber for AM Best TV.